Ladies and gentlemen, good day and welcome to the Q1 FY22-23 earnings conference call of PNB Housing Finance Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Gupta Padhi. Thank you, and over to you, ma'am.
Thank you, Stephen. Good evening and welcome, everyone. We are here to discuss PNB Housing Finance Q1 FY22-23 results. You must have seen our business and financial numbers in the presentation and the press release shared with the Indian stock exchanges and is also available on our website. With me, we have our entire management team across verticals sitting over here, led by Mr. Hardyal Prasad, Managing Director and CEO. We will begin this call with the performance update by the Managing Director and CEO, followed by an interactive Q&A session. Please note, this call may contain forward-looking statements which exemplify our judgment and future expectations concerning the development of our business. These forward-looking statements involve risks and uncertainties that may cause actual developments and results to differ materially from our expectations. PNB Housing Finance undertakes no obligation to publicly revise any forward-looking statement to reflect future events or circumstances. A detailed disclaimer is on slide 34 of the investor presentation. With that, I will now hand over the call to Mr. Hardyal Prasad. Over to you, sir.
Thank you, Deepika. Good evening, everyone, and a welcome to our Q1 FY2023 results. On behalf of the company, I extend a very warm welcome to all of you. Let me start with the business update. As we communicated about our focus on the retail segment, we registered disbursement growth of 96% during the quarter as compared to the same quarter previous year. We disbursed 3,451 crores in Q1 FY23, with retail segment contributing 98% of the total disbursements. During the quarter, the company disbursed gross amount of 76.5 crore under the co-lending, which is in 20/80 ratio. We are also in discussion with other banks for co-lending arrangements. On loan assets, retail loans registered growth of 2% YOY and 1% sequentially to rupees 50,294 crores as on 30th June 2022. The corporate loan asset declined by 45% YOY to 6,006 crores as on 30th June 2022 on account of sell-down and accelerated prepayments. The loan assets for the company outstanding as on 30th June 2022 is 56,301 crores and the asset under management is at 64,849 crores. On expansion of our footprints in the affordable housing segment, we have operationalized 10 new locations during the quarter, bringing the total number of locations to 34. As of 30th June 2022, our Unnati segment AUM was 3,047 crores. Coming to our asset quality, with our continuous efforts to reduce the GNPA, I am pleased to inform that our GNPA on Ind AS basis reduced by 23% during the quarter, primarily on account of corporate book. The corporate book gross NPA registered a decline of 37% in Q1 FY23 to 1,732 crores as compared to 2,738 crores as on 31st March 2022. The decline in the corporate GNPA is on account of resolutions through change of developer accounts, closure in 2 accounts, ARC sell-off in 1 account and write-off in 2 accounts. The retail GNPA declined by 3% during the quarter to 1,907 crores as compared to 1,968 crores as on 31st March 2022. In percentage terms, the gross GNPA is at 6.35% as on 30th June 2022 as compared to 8.12% as on 31st March 2022. We continue to focus on improving our asset quality going forward. As of June 30th, 2022, the net NPA was at 4.26%. With the increase in the repo rate in Q1 FY22, the company passed on the increase in rates to its customers. The impact of increased interest rate is yet to be fully reflected in the yields. In terms of liabilities, the impact of increase in repo rate is reflected in the cost of borrowing, as the overall cost of borrowing increased by 11 basis points. The company has reduced its liquidity in the books of around 3,800 crore on standalone basis as on 30th June 2022, as compared to 7,085 crore as on 30th June 2021. The profit after tax on a sequential basis increased by 39% to 235 crores in Q1 FY23. The ROA is at 1.47% in Q1 FY23 as compared to 1.24% for financial year 2022. With increased percentage of retail book, it is imperative to see the ROA of the retail book. Our retail book ROA over time has increased from 1.3% in FY20 to around 1.5% in Q1 FY23. The leverage has come down to 5.1 times as on 30th June 2022 from 6.33 times as on 30th June 2021. The company is comfortably capitalized with CRAR at 23.9% and Tier 1 at 21.4%. The residential sector is experiencing an increase in demand, particularly in Tier 2 and Tier 3 cities. As per ICRA, the portfolio of NBFCs, HFCs is expected to grow by 9 to 11% on account of pent-up demand and increasing level of economic activity. To leverage on this opportunity, we will continue to focus on retail lending, expand our affordable housing loan offering, improve our portfolio credit quality, and enhance efficiency through digital interventions. On the capital raise, PNB has received its approval from RBI to infuse 500 crore in the rights issue of the company. Further, the company has received the final settlement order whereby issues raised with respect to the preferential issues have been settled under SEBI Settlement Proceedings Regulations 2018. The draft letter of offer is in the final stages and to be filed at an appropriate time. With this, I would like to open the floor for questions and answers. We have the entire management team sitting over here to answer to your questions, and we welcome any question that you have, and we'll be more than happy to answer them. Thank you very much for coming and attending this meeting. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
To give me this opportunity. Sir, due regards to all management team which you are sitting there, want to ask when PNB Housing Finance Company will revive. Your gross NPA 6.40 as on 30th June 21, 4.05 NPA level on 30th June 21, while it is 6.35 at 30th June 22. Net NPA rises to 4.26 in 30th June 22. When whole country bank and housing finance company improve their performance, but very sad to know PNB Housing is nowhere in the game. What is the main problem behind this scenario?
It's a fact that the NPAs had gone up significantly, and that is historical reasons why it had gone up, and it went up. And then subsequently in December, because of the November RBI circular, there was an impact on the company where about 800 crores of NPAs had further gone. But if you look at the two quarters that are important, and in one day it is not possible for anyone, actually any organization, to bring down the NPA straight away. If you look at the 2 quarters, which is the March quarter and the September quarter, and the June quarter, you will find that there is a significant reduction in the NPA that have been done. In the March quarter, we have reduced the retail NPAs by almost about 600-700 crores. And in this quarter, there has been a reduction of almost about 1,000 odd crores, which is about 23% of the NPAs have come down in Q1 FY23 versus only Q4. So it's just a matter of time. I mean, I can't bring it down straight away, but yes, there is massive effort that is being done, both on the corporate side and on the retail side, and the reduction has taken place both on the retail and the corporate side. There are a very large number of accounts which are under resolution. We have resolved about, I think about 1,000 crores have resolved, and we have another 1,000 crores sitting over here, which we are attempting to resolve, and I'm very sure that in the next 1 or 2 quarters, we should be in a position to resolve. That's on the corporate side. On the retail side, if you look at it, we are very seized of the matter, and we are very clear that we would like to bring down the NPAs to less than 2% going forward. I think that's what it is. It's a journey that we are going to take, and the journey has already started from December 2021. 2 quarters we have exhibited that there we can reduce the NPAs, and will continue to exhibit the same kind of rigor in terms of reduction of NPAs.
Understand. You see, one figure I would like to discuss with you. Our market cap is 6,000 crore. Our AUM is 56,000 crore. Nowhere in the history of finance market we have seen so much low market cap of any finance company in compared to AUM. What I want to know, how many more bad debts lying in the company which need to come outside, why the market is not giving any good value to the PNB Housing. That is my question to all management teams. You are sitting there.
Oh, I think I missed one word that you said. What is lying? Huh? Bad debt. I think we have cleaned up everything. In fact, we were among the first HFCs which recognized the NPAs, where while the time was up to September 2022, we still went ahead and recognized the NPAs, which was as per the Reserve Bank of India direction in December 21 itself. So I think there is nothing that is lying as hidden either on the retail side or on the corporate side. We have gone ahead and we have cleaned up everything. That is one part of it. In terms of the market capitalization, in the market cap and everything, you would have seen that when the issue was announced, the preferential issue was announced, the market cap, the share price went up from about 440, which was on the day that was trading, almost about 900 rupees. So there is a potential in the market. There is possibility of growth. It's just a question of, because of some reasons, and you know the reasons, because I'm sure that the kind of investment that you are doing in terms of actually looking at the balance sheet, looking at us, the approval from PNB had not come. I think that is one of the largest things that is there. Now that the PNB has an approval to invest 500 crore, it's just a matter of time that the DLFO is signed, DLFO is submitted, and the capital would. There are 3 important things that actually would help us in improving the share price and the market cap and everything. One of them is the capital requirement that was always actually at the back of the burner, but it has come forward. We will come out with a rights issue. The second was on the growth. In 2 quarters, we have shown that there is a growth. In first quarter, we actually showed a growth of almost, and I would talk only about the retail, because we have already 2 years back, we had very clearly said that we will not do corporate. We did a growth of almost about 700 crores on the retail in the first quarter, the last quarter of the financial year, which is January to March. We have again done a growth of about 550 crores. I think there is a very clear green shoots that are coming in. So that is the second part of it. First is the capital, second is the growth. The third is the NPA. If you really look at it in the last 6 months, we have reduced the NPA by about 1,700 crores. I think these are the way forward, and I would like, I would exhort and I would say that we are now moving in the right direction, and we didn't want to say anything unless we actually demonstrated to you in the next 2 or 3 quarters that there's a growth. If you look at the disbursement have grown by 96% over the June quarter of 21. So the disbursements are going up, the ENR is going up, the NPAs have come down. So I'm not saying it's a very rosy picture, but I think there is very clear direction that the company is on the path of recovery.
Okay, all the best.
Thank you very much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Anand Mundra from Soar Wealth Managers. Please go ahead.
Hello. Yeah. Sir, I have one question. You mentioned that you have grown in retail quarter-on-quarter, but your disbursement has not grown in Q1 FY23 as compared to Q4 FY22. And I'm missing something. I just wanted to clarify that.
First is actually that the growth has come in. You know that there is a growth, and it is very clearly reflected in the numbers which you would have seen. In terms of the disbursement that you are seeing, I think we did a very good, almost about 3,700 crores of disbursement in Q4. Now again, we have done almost about 3,400 crores of. This is a slower month, and if you would have looked at the results of some of the HFCs, most of them have shown almost about 20 to 40% decline in the numbers in comparison to Q4. Our decline is only 7%, and this is usually a soft period. April, May, June is actually always a soft in terms of any HFC that you look at it, you would find that the numbers come down significantly as what it was done in March quarter. I think we had a minor blip in terms of the 7% decline, but we remain steadfast in terms of showing the growth, and we are anticipating, we hope that our growth will be approximately in the high single digits.
So any guidance for the growth for this year with respect to disbursement of the AUM, sir? Retail book only.
Disbursement down? So I said about higher single digit growth we are expecting this year. We already have grown by 1%. If you look at it as an annualized basis, it's a 4% growth. While the market is slow in April to June, we still had an annualized growth of about 4.3 or 4.4%. So going forward, things are only going to improve. Despite the fact, there was one more thing that happened in the first quarter, and that is actually the interest rate. There are two. One is the interest rate. There is an increase of about 90 basis points in interest rate, which actually dampened the market to some extent. The second is that the input costs have gone up significantly. These input costs in the construction activity have actually increased. The 20 to 25% increase in the price of a property, which is also a little damning from what the general public had seen, which was amongst the lowest interest rate, lowest prices, and everything for the last year. So that was a little dampening. I am sure that people will come forward because still there is. If you look at the mortgage market to the GDP, it is only at 10%. There is massive scope sitting over there in terms of the growth, and I'm sure that people are realizing and the growth will come in. And we are right now, after all the cleaning up that we have done, we are suitably placed to actually encash on that growth.
So you are given a guidance of 15% AUM growth for the financial year FY23 in retail. Correct? No, not 15%, high single digit. In mid-10.
High single digit, which is anything from 8-9% is what we are looking at. Okay. I mean, high single digit would be 7 to 9, but actually, that's the kind of growth that we are looking. We already have done 4.3, 4.4 at a period which is normally very soft.
Okay. Sir, tell me, in market, you guys are competing with, I am assuming you are competing with likes of HFCs, HDFC, or ICICI Bank and other players. It's very difficult to compete with them. Their cost of funds are really low. So, right what now, is the differentiation?
Please go ahead. Sorry.
But what is the differentiation which we bring to the table for the customer? Otherwise, he will definitely would like to go with a larger bank which may offer better products or better pricing as compared to us. We are not focusing on that segment.
A couple of things I'm going to do. One is today, for the best customers who have, say, about 800 plus CIBIL score, my interest rates and the competitors' interest rates are almost at the same. 7.5, 7.55 is what I also quote, and they are also quoting. So as far as the class of customers that we are looking at it, the salaried and others who normally go over there, we still have interest rates which are pretty competitive. So that is one thing that actually, so I'm in the competition, and that is why I am growing. The second is that my actually ability to underwrite self-employed and NHL is far superior than any of the bank. So even if actually this quarter, if it has been a little slow, I will ensure that these capabilities that we have in terms of delivering, say, nobody can deliver in about 3.5 days. We actually not only deliver it, but we aspire to deliver it in 3 to 3.5 days, 4 days to a self-employed person if he is applying for a loan. I think these make us very, very distinctive in terms of the way we deliver it. So if the interest rates are competitive, if my delivery is good, people will come to me. Otherwise, what was happening, because of the speed of my delivery, people were coming to me. But then after 3 months to 6 months, I was realizing that people were running off from me. The portfolio would shift, somebody would take over, because you want a loan today, I was able to give it, the bank was taking about a month to give it. So he takes a loan from me, but he comes back to me after 3 months and says, I want actually to move on to some other bank. That we have completely arrested, not completely, we have significantly arrested. Almost it is 60% down, 7 to 4, or 60% down. So we have significantly reduced the runoffs. So I think these are two things because of the interest rates we are covering, the sharpness which the sales is actually entering into the DMA relationships, the APF relationships, the salaried. Our salaried is doing very well. We are actually increasing our salaried significantly, which actually deleverages us from the risk also.
So I think for this sorry, sir. Sir, how much is the balance transfer for this quarter, sir? Earlier it used to be 18% for the year.
Balance from us to
From us to others, 9%.
9%. So I told you, during the COVID, the issue was that earlier everybody was quoting very high interest rates. The differential between me and the others used to be about 50 basis points, about the best of the banks. During the COVID, when the interest rates regime started coming down, the differential went up to almost about 1% of 100 basis points to 150 basis points. And that was the reason why the numbers that you are giving had resulted into that. We took up, because there are so many things happening on our portfolio, we wanted profitability, we wanted to ensure that the company remains steadfast. The moment we realized that it is time for us to go back to the market, we have actually paid the interest rates which are very competitive with the market. And that is the reason why this has come down significantly.
So 9% is for what period, sir?
No, annualized. This quarter
Annualized.
9 is annualized, which would mean how much? About 2.7.
Approximately 2.25%.
Yes, sir.
Particular quarter, okay. Sir, another thing which is very important for the growth is the right issue. What is the pricing for the right issue, sir? Why it is kept in suspense for all the minority shareholders?
So one is on March 9th, the board has approved the capital raise of 2,500 through the rights issue. And that's the public knowledge. Now, what has subsequently PNB has also received RBI's approval to participate in the rights issue, and that they have done is approval is for 500 crore, which again has been announced, and they would hold the shareholding at 30%, but above 26%, below 30%, but above 26%. This is the second thing, which is one of the most significant thing that has happened, that this time they were able to get approval. Last time they were not able to get approval. The third is that we have already appointed investment banker, legal counsel, and everybody is on board. And the draft letter of offer is almost at the final stage. There are certain regulatory and other issues that are being sorted out. Once these are sorted out, the company is planning to file the DLR as soon as possible, and maybe it is within weeks also. So this is what we are going to do it. And but then actually with respect to the preferential also, we have got it completely. As far as the SEBI is concerned, the settlement is final and everything has been completely taken over. So this is where we stand. I think if some of those issues can get sorted, I can say a few weeks. But unless those issues are sorted out, I will not be able to apply to the SEBI with the draft letter of offer. We are working very, very vigorously on these issues. Hopefully, we should be in a position to file as quickly as possible on these. And the biggest advantage is that the capital raise will bolster our capital position and enable the company to accelerate the growth. For the rating agencies and others, this is again one of the most significant things. And with the leverage almost at 5.1%, which we have brought it down, and our capital adequacy at 23.9, I think this is one of the sweetest things that could happen for this company to actually go ahead and then book new, because this is a growth capital that we are looking at it.
But sir, it would be really helpful if you can give some guidance on the pricing, because it's really suspense from last 6 months.
On the pricing of issue.
Pricing of right issue.
Timing actually, sir, I cannot actually say to you, because there are certain issues that I need to address it. The moment we address those issues, we will be in a position to do it. Because even if I can apply tomorrow, but the point is that I'm not going to get an approval unless everything is complete as far as the draft.
Right issue price will be approved by the board. SEBI will just confirm that. At least you can give us give an indication what price board is giving an approval for right issue.
Sir, I will not be able to give you the price. It will go, and then we have investment bankers who are going to come, sit with the SRC, sit with the board to come out that what exactly would be the price on the rights issue.
So, sir, the way
Last thing, sir.
Once we file the DLOF, because it is not a fast track, it's under normal track, it generally, SEBI takes some time to come back onto that. And once we get an approval from SEBI on the DLOF, we file the letter of offer, and at that point of time is what the pricing gets decided by the board. The pricing is open in the sense that it will depend upon the market price at that point of time and how the stock is behaving in the market. Basis that the pricing will be decided by the board, and of course with the recommendation of our investment bankers that the pricing will be decided and announced to the market.
Okay, understood. So last question from my side. With respect to Unnati AUM, it has not grown in this quarter compared to last quarter.
Unnati AUM has not grown in this quarter.
Actually, I think we had mentioned to you, or we had actually explained that we are not only we have created a small vertical, but we have also now a head of the Unnati, which is the chief sales officer who is looking after the Unnati. She has joined about a month back over here, and we are putting in place we are revamping the whole product in terms of the policy. And she comes with almost about 10, 15 years, 26 years of experience in the mortgage industry, and about 10 years to 15 years experience only on the affordable page. So the team is being assembled. The policy changes are being done because affordable, obviously, we realized is a very different thing than what we were doing in terms of that. So the Unnati portfolio is actually going to be completely different. So that churning was taking place during this quarter, and we hope to go ahead and start booking the business as early as maybe September.
August was no disbursement in Unnati portfolio in last quarter, sir?
What was the portfolio?
No, there was no disbursement in Unnati portfolio, Unnati segment in last quarter.
No, last quarter there is, I think, about 140 crores of disbursement.
So if 140 crores,
the whole policy is undergoing change. So there is a new, completely new approval matrix that is being defined, and how it is going to be rolled out. The ticket sizes, on the eligibility norms, a lot of things are going ahead, and that is the reason why it has slowed down to some extent.
Sir, I understood that. So if there was a 140 crore disbursement, the AUM should have grown by at least 50-60 crores net of repayments. Why there is a degrowth in AUM by 50 crores?
So actually what has happened is, though we have done the fresh disbursement of 142 crores, but our runoff on the Unnati, we have seen slight runoff on the Unnati, and hence as sir has also mentioned, that our MD has mentioned that we are going through the transformation in Unnati business. We are scaling it up. We are redesigning the entire model, and hence the business that we are doing as usual was on a slow down method, and at the same time the attrition was a bit higher.
How much was the runoff, sir? How much was the runoff?
The new Unnati that we are going to do.
Runoff in the quarter one on Unnati portfolio was 25% on annualized basis.
Yeah, good evening. This is Valli Shekhar. I'm heading the affordable housing piece here. Currently in the Unnati product, what we were concentrating was in the lines of priority sector lending, where our loan amount was in the range of up to 35 lakhs. But the actual affordable housing would be like the EWS LIG 1 and LIG 2, which the government prescribes, which would be in an average, loan rate of approximately 9 to 10 lakhs. since we were doing these loans up to 35 lakhs, we were seeing significantly a lot of runoff in this loan portfolio. As far as affordable housing is concerned, the runoff is generally in the range of 4 to 5% only. So completely we are revamping the entire product policy procedures, and we are completely coming in line with the actual affordable housing market. So you will see a turnaround in the product and in the policy and procedures in maybe by the end of next quarter, and from October you will be seeing numbers growing in this as per the actual affordable housing policy in the market. Thanks.
And very competitive products, competitive interest rates, and the delivery and everything is going to be actually, then you can compare that particular portfolio with the affordable or the other competitors who are there in the market doing similar kind of business with a ticket size as anything between 8 lakhs to about 15 lakhs.
So, sir, what is the cost yield in Unity portfolio?
Your voice is actually little.
So what is the gross yield? I just wanted to understand, sir, if there is a 25% runoff, what was the main reason for that?
Quarter is 6% actually. 6.25 makes it.
6.25% for 3 months. I'm just wondering, sir, these guys portfolio has moved. It has moved to banks, or it has moved to some other NBFC or HFC?
Where moved? Banks. To the banks.
Okay, sir. Thanks a lot, sir.
Actually, what happens is some of the banks suddenly become very aggressive in terms of their priority, especially when they have a shortfall in the priority sector lending. They become very aggressive in terms of actually capturing that business. And it is at that stage that portfolios start moving here and there. Even when actually on the co-lending side, when we go and talk, there are various ways in which the banks are looking at it. Some of them are looking at priority sector. Some of them ask for self-employed. Some of them said, I want NHL. So it's a different mix of the portfolio that that particular bank would like to build to ensure that, to actually give a guidance that this is the kind of portfolio I would like to accept under the co-lending platform. So whenever there is a shortfall in the priority sector lending, it is when actually we will see this kind of effort. But what Wali is mentioning is that it is normally about 4%. So there is a little uptick between 4 and 6%. So 2% is actually the additional delta on the Unnati platform.
Okay. Thanks a lot, sir. Thank you.
Thank you. The next question is from the line of Krishnendu Saha from Quantum AMC. Please go ahead.
Yeah, most of the question has been answered. Thank you. But just on the Unnati, this thing, if I can ask, what has been the GNP over there?
What has been the change?
No. Just on the Unnati.
See, predominantly the Unnati after this COVID impact, it is 150 odd bits higher than the what in general we are facing now. So it is in the range of delinquencies around 3% and around.
3% is the number. Okay. Okay. And
one thing that we are doing is actually we are revamping the whole collection system of Unnati, and we are setting up a complete infrastructure right from the ground only for collection of Unnati, because that is much more rigorous collection process and other things. We anticipate that not only the new portfolio that we are going to build will actually the collection will take place of that and the delinquencies kept low, but this existing also we are very, very sure with this new Unnati vertical coming up, it will also look at the existing delinquency of the Unnati portfolio. So one is the existing Unnati and then the new Unnati kind of portfolio that we are going to build. And both of them should see after maybe just as Wali mentioned, that you will start seeing some traction somewhere around October, November. The disbursement will start, but the traction that you will see with maybe from December onwards, you will find that there is a traction coming up in the business as well as in the collection machinery.
Sure. Right. Thank you. Thank you.
Thank you, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Nikhil Walecha from Franklin Templeton. Please go ahead.
Thanks for giving me the opportunity. Sir, you have shared GS3 as per Ind AS. Is it possible to share the GNPA under the IRAC?
No, we don't maintain it in the IRAC. We maintain it under the POS. We can, I mean the IGAP kind of, but through the only the POS we can give. The Ind AS actually also based on the interest rate. But now we are monitoring it only for the Ind AS. There it actually the interest actually component is added to it.
Okay.
If you want, I can give you those numbers also. There would be a differential of about 100 to how much would be the differential? 300 crores. 300 crores.
Okay.
In the IGAP and the Ind AS, there would be a differential of almost about that's the amount.
Understood. And secondly, I see that the stage 3 coverage have dropped slightly. I believe some of that would be due to write-off. But
yes,
given that there is a aging of NPA, so that coverage should increase. So why it has decreased? And I think even the provisioning from the P&L side also it has dropped. So ideally, I think you should have increased the PCR, but what is the reason for the decrease in the stage 3 PCR?
There's hardly anything, no reversal.
Yeah. See, this what you're looking at a stage 3 number is, you are rightly mentioned, it is after the set off of these write-off with the provision numbers. And then also we need to understand that there has been an upgradation of one account, which has moved from stage 3 to stage 1, right? And then one account has been sold to the ARC. Okay, so that has been there has been also exited, but we are maintaining the provision on the on the impairment against the investment side, that net number. In terms of the provisioning and the vintage prospect, everything is considered here. So what we have actually written off is the vintage accounts only, which are a large exposure, 244 plus 21 and 425 crore exposure we have written off after applying all the resolution strategies that we are having.
So the reduction is mainly because of those 3-4 accounts where one is we utilized some when it was sold to the ARC, and 2 write-offs are there. They were fully provided accounts, so that has been used. And there has been some decline in the NPAs of even of 100 crores of retail. So that is all the primary reason. Otherwise, it's not that we have actually deliberately reduced the provisions.
Okay. And sir, earlier you used to share GNPA of segment-wise, so construction, finance, lab. Can you share it now? How it is trending?
I don't think that we were only annually we were doing it. We have not done it quarterly. But I think what we'll do is that Deepika will get in touch with you, the Investor Relations Department, and they will actually share some numbers with you.
Okay, thanks. And if I look at
the retail and corporate GNPA is shared in the presentation. You can have a look at slide number 16, which gives the NPA for retail as well as for corporate.
Actually, now increasingly we are bringing the focus on the retail because we have already stopped doing the corporate. So obviously the corporate, there is no new loan that is being sanctioned. If the no new loan is being sanctioned, the NPA, if the account becomes an NPA, percentage terms, it will look very, very scary. But the point is on the retail side, it is very important that whether we are able to actually manage and bring down the NPAs on the retail side. And I think we have that's where we have worked towards reducing it.
Understood. And sir, if I look at the spreads, it's at 1.4%, which is I think all-time low, and I think reason that you mentioned is quite. I can understand that there is a heightened competitive intensity, but on the incremental basis also, if I look at the incremental cost, I think it's closer to 7.5% based on the recent NCDs. So what are the incremental spreads that you are working at?
Spread we are looking at is more around 1.5, 1.6 types. So, and how it will come about is that, we have instituted increase in our lending rate by 35 basis points, which has been captured in the quarter, and another 50 basis which will come in July to September, where our cost of borrowing will not go up to that extent simply because we have certain fixed rate liabilities as well. So we will add to the spread will slightly increase.
One thing is there that in this quarter, the cost of borrowings have actually gone up only by 11 basis points because of the mix of our borrowing that we have. And in terms of the yield, because we are actually focused now only on the retail, it's going to be very different than what you would have looked at. So traditionally, if you start looking and comparing it with that those yields were coming from assets which were, very high yielding interest rate, very high yielding. Now it is only going to be the retail loans. With the retail loans, with more and more focus on the retail loans, obviously we'll have to start living with the spreads which are on the retail side. And when he talks about 1.55 to 1.6, it is basically the retail that is going to pump in those.
Understood. And just a final question from my side is, as you will do a fresh capital raise, then I think our tier 1 will again increase and ROE will further reduce. So unless and until we increase our growth to say 25%, 30% level, it would not improve substantially. So can you give some medium to long term guidance, like how are we looking at say 3-4 years AUM growth, or how are we looking at ROE from the 3 to 4 year perspective?
We have submitted it to the regulators also, but we are going to listen. First of all, we still have a large book. It's not that we still have the third largest HFC, and we have a large book. So a small company with about 5,000, 10,000 crores of AUM, it's very easy for them to say, I've grown by 20% and all that stuff. For us, it's a little challenging because at 50,000, 60,000 crores to grow. So when I say that we are going to be on high numbers, even if I say 5,000, if I say 9%, 10%, it translates into 5,000-6,000 crores of growth straight away. So that is what we are looking at. We are looking at high numbers this year in high single digit, and obviously going forward these numbers will improve. I think we are in a sweet spot in terms of it's a cyclical industry, and we are in a sweet cycle where for the next 4-5 years we anticipate that the going is going to be good on the mortgage industry. So the going is good. There is no reason for an HFC, especially when it has cleaned up its books, when it is ready to go. It is demonstrating in the 2 quarters that it is actually growing. To actually go ahead and start. And especially another very significant thing is that in next 2 years you would also find that this Unnati, which is a new Unnati kind of affordable kind of Unnati, that will start kicking in. Even if it doesn't give me a very high AUM, but it still gives huge amount of advantage in terms of the spreads, in terms of the margins and the NII and NIMs and everything. So that's what we are looking at it.
Understood. And sir, just one more question. How is the co-lending partnership working? I think I forgot you had some co-lending partners. So how's the traction over there?
So we have already reported. We have actually with one of them. We have agreements with two one private sector and one public sector organization. With one private, we have already given them 78 crores with the 61 crores and remaining is with us 60-20, 80-20. And we have also given to the other partner also we have given a significant number of files. We are also in discussions with some other players, with some other banks to actually provide that kind of. We are expecting that it's still early times because there is the straight through processing, and the reason is not ours. Some of these banks want absolutely a seamless integration with our system. Our systems are ready. My APIs are ready. I've shared my APIs. But these banks, and some of them are large banks, they are not ready with their APIs. Once those APIs are integrated fully, is at that stage that the flow will take place, and we anticipate that the numbers will start coming in. Right now, we are pushing the files through SFTP, and we are seeing that actually these can be, booked under them. I think with the numbers that we have given it to the other bank, we will see some traction in the co-lending.
Understood. So as of now, it's very small, but you expect it to pick up.
Yes, sir. It all depends also. I mean, co-lending is good. We'll have to bring in, first of all, my AUM, it affects my AUM. When I have transferred 61 crores, my AUM has come down by 61 crores. So we have to actually pair it and see what is profitable for me, what is good for me, what is the customer's requirement. If the customer is really, very finicky about the interest rate, we will have to bring in a partner where the interest rates are slightly, in median between both the interest rates of that organization and our organization. So it's a mixed bag of how you would like to handle the co-lending. However, the co-lending also provides a good opportunity for fee-based income, which is what we are also looking at it.
Understood. Thanks a lot.
Thank you. The next question is from the line of Sanjeev Kumar Damani from SKD Consulting. Please go ahead.
Good evening, sir. Am I audible?
Yes,
sir.
Please proceed.
Sir, am I speaking to Hardayal, sir?
Yes, sir.
Sir, I am very impressed the way you have all answered. So I congratulate on that to you. Sir, my one first question is that, I mean, can you quantify, the total loan accounts that as on today you hold, or as on 30th of June, total accounts that we hold of the loans given?
About 2.52 lakhs.
2.5 lakhs people. Total files are 2.5 lakhs.
Accounts, sir. 2.5. There will be multiple accounts also.
Multiple. So 2.5 lakh accounts we hold, where we have given to entities we have given loans. Right, sir? Achha, can I know this, our employee size, sir, as on date?
1,400.
1,400 are directly on our payrolls. And do we have associates also working for us?
Yeah, we have another, on the sales side, there will be approximately 2,000. 2,000 only on the sales only, because I think he's also in the sales side. 1,400 people working only for the sales.
Only for the sales, but they are not
sales and underwriting.
Achha, but are they all employee of the company, or they are an associate of the company?
No, we have a subsidiary which provides us this manpower.
Achha. We have a separate subsidiary where people are recruited to work for this organization.
Yes,
way.
Sir.
So it saves us some cost that way, sir.
Yes.
So that
Yes,
I was observing, sir, that your retail portfolio is really going up, and you are quite well spread into the middle of India and below down south also. But being a Punjab National Housing Company, are you not present in North, or PNB Bank also does the housing finance as such, sir, in North area?
Sir, we are pretty strong now in North India. We are across India. We are at 70 plus cities. We have almost 99 branches, and we have also outreach offices. So we are pretty strong in terms of the distribution network, geographically, city-wise, and everywhere if you look at it. On the north side, we definitely are strong, but I would admit that as a PNB brand name and brand organization, we still have big opportunity to encash on the PNB brand by actually making much bigger inroads into the market, which is what we are planning. And today, if you look at it, in the last about few months, we are seeing that there is a good traction that is coming in the north.
Okay. Because I was seeing
traditionally we have been very strong on the west.
Okay, traditionally very strong on the west, sir. So sir, now sir, when we talk about our NPS gross and all that, so I mean, do you feel or do you face problem in collecting EMIs properly every month from even small individuals who have taken loans from you for housing or repairing or something like that? Are there failures? It is the sum total that you are showing as gross NPA is largely from retail side, or it is a old baggage that we are carrying of the corporate?
No, sir, it is retail. Actually, most of the time now we are talking about the retail. Corporate is something we talk completely differently because for last 2 years we are doing only retail. There is no disbursement that is taking place other than few, maybe 50 crores, 100 crores of the old sanction. Now, in terms of the collection efficiency, we are almost at about 97% collection efficiency. So we are able to collect, we are able to get money, we have feet on street, we have all arrangement. We have digital tools to actually get the money. So everything is there. We provided it on our applications where a customer can come, check his EMI, see how much money is to pay. He can there itself repay us by the click of a button. So there are multiple ways in which we have calling centers that are there. So we actually through the advance analytics, we the delinquency or actually the repayment is split over there. Something goes directly to the calling center, something goes to the field, depending on the matrices that we use. And that is the way we actually try and save the money on the... So the cost of collection has actually come down. If you look at it, there is a big difference in the way the collection is happening. Earlier, most of the NBFCs and HFCs were actually collecting. They would collect 1 or 2 installments, and then they would wait, and next month again they would go. Now we are very clear that you need to remove complete irregularities. Because the very fact that from 800 crores that we had actually on the, because of the Reserve Bank of India in March, we have just about 61 crores of accounts which are actually less than 90 days. But because of the Reserve Bank of India definition, we are able to collect the money now. That is the reason why we are able to reduce our NPS.
Okay, sir. Sir, one fine question, how...
sorry to interrupt, but for any follow-up question, may we request you to rejoin the queue, please. The next question is from the line of Aditya Doshi from Chanakya Capital. Please go ahead.
Hello. Thanks for the opportunity.
Mr. Doshi, if you can speak through the handset, please. Your audio is very low.
Hello. 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 Hello.
You may please proceed.
Yes, we can hear you.
Sir, thanks for the opportunity. I just wanted to know that our corporate portfolio has almost 22% to 9%.
Sir, but your audio is breaking up. Maybe request you to move to a better reception area, please.
Hello. Now is it better? Hello. Hello.
Still, it's not clear.
Now it is better?
Yes.
Sir, our composition of corporate loan book has almost reduced to 9% from 22%. So will PNBHF again relook at corporate building, given that real estate market is picking up and project completion is not much of an issue in today's scenario, and we can cross-sell that to retail. So what's your strategy on that? And to Unnati,
sorry, sir. Once again, your audio is breaking up.
Hello. Hello. Now is it audible?
Yes.
I hope you have heard the first question regarding the strategy to corporate where... okay. And second is follow-up to the Unnati book. Since Unnati is a fairly new product, so why do we require it to again revamp it again? And second, have we outsourced collection of Unnati?
Two things. The first question is you are actually on the corporate book, whether we are going to restart the business. We have been looking at it to restart the business. However, because of the very high NPAs that we were holding, and the market also was not very supportive, that was one of the reasons why we had not ventured back into the corporate book. One of the reasons was now we find that there is much more order and discipline that is with the builders, and there are certain type of builders who are pretty good, and the deep pockets also. We are definitely reviewing it, that what should be our sweet spot in terms of doing it. We have done projects which are 1,000 crores also, but we are going to look at the sweet spot, what we want to do it. At some point of time, at the appropriate time, we will re-enter the market. As an HFC, I think it is essential that we have actually present across the mortgage industry. One of the primary reasons why we had pulled back was also because of the capital constraints that we had. And the risk weightages that you have to attach to a corporate loan is 100%. And we did not have the capital at that time to go ahead and do it on the to continue to do it. That was one of the reasons. I think the moment the capital is there, I think we should be in a position to restart the business, because capital is important. If the growth story comes on the retail, I would not like to actually get hamstrung that I do not have the capital to actually go ahead and I have to lend. So that is one thing on the corporate book. The second is actually on your Unnati collections. The collection is more or less actually we have insourced it, but yes, we also work with some of the agencies, collection agencies who are accredited, who have the required trained people on it. We also use them for collection purposes. It is not that it is used only for the Unnati, it is used across the organization also in certain ways.
Okay, so is it fair to assume once the rights issue is through, we can go, and if you can provide some timeline when we can enter this, maybe during this year or the next upcoming quarters?
I cannot give you the timeline because I need an approval from the board, because board in 2020 July, it had asked not to do this business, so I will have to go back to the board. I will go back to the board once the situation stabilizes. I have a fairly good capital adequacy which will support the business and the growth. And so there was one question that what would be a growth trajectory in the next 2 years. I have to factor that in to ensure that the capital is adequate to take care of the growth that comes not only on the retail side but also on the corporate side.
Thanks. Okay, thanks. Got it.
Thank you, sir.
Thank you. The next question is from the line of Krishnendu Saha from Quantum AMC. Please go ahead.
Just about the restructured book, which was around 4% or 4.5% of the book of the loan book. So I was just wondering how is that? What is the number? How are the payments coming across? Will you shed some light on that, please?
Yeah, sure. On the retail side, the restructuring book outstanding, principal outstanding is around 2016 crore, 2016. And out of that, around 300 crore has already moved to stage 3, which is part of the 1696 NPAs on POS level. So, and almost 75% of the customers, either in the form of principal or interest outstanding, have started making the repayments.
Okay. So you expect 25% of the customers to move to stage 3?
Around 30%, yeah, 29, yeah. 15%, sorry. 15%, 300 crore, I'm saying.
Okay. Okay. The restructuring they've all which had come, that you said that they were all started paying. There's nothing left, no moratorium left for anybody left, right? Hello?
No. Yeah. See, as I said, around 75% of the customers have reverted back to the repayment stream. So another 23% odd customers are still in moratorium.
Okay. Okay, I'm still in moratorium.
The book that he gave, we gave a book of about 2,200 crores. 2330 is actually the number over there. But almost about 1,500 to 1,600 have restarted the repayments.
Okay.
And the number that he has given of NPA also, remaining would be, 1 DPD onwards. Some of them would be 1 day, 30 DPD or whatever it is. Though that is being monitored completely separately in terms of the restructured book. Restructured book and the moratorium book is being completely relooked at in the way we would like, and there's a big focus in terms of ensuring that these people should, especially the ones who have started, they should continue to actually repay. And the ones where the business is coming up, because we had a very large pool of self-employed within this, people where the business has restarted, there's no reason for them not to do it. So whether he's repaying it good with us, bad with others, bad with others, good with us, bad with me, good with others, we are actually looking at the portfolio, dissecting it completely, and then seeing to it that actually we reach out and we say that you have to repay to us. So if it requires a little tough stance to be taken, we are taking those stands. With the opening up of the legal machinery, today the SARFAESI and other things, it is one I spoke to you only on the feet on street and on the collection side, or what we would on cash collection and other things. However, now we see that there is both the administrative machinery as well as the legal machinery, the court, they are allowing us to actually issue and take the physical possession of the properties. There are a significant number of physical properties that we have taken. The auction has opened. All these things are helping us in terms of actually putting the required pressure or to ask for the money. There is no reason why I have lent. I will not ask for my money. There is a security underlying over there. He needs to either repay it to it, sell it to me, or whatever he wants to do. It's a put it on the auction. So we are using all these machinery to ensure that these are brought down progressively.
Right. But just on this capital raise, we are fairly well.
Mr. Saha, sorry to interrupt, but your voice is once again breaking up. May we request you to move
Can
to
you
a better reception area, please?
Can you hear me now?
Yes, sir.
Hello.
Yeah, we can hear you, but your voice breaks.
Oh, I see. Just a minute. Just on the capital raise, we already are 22% capital adequacy Tier 1. So what is the hurry that we have to raise the money? Couldn't we wait and clean up the book a little bit more, grow the book? And we still have time. Why do we need the money so soon? That was my thought. So I don't know if you could put in some thought on that part.
Well, it is a money required for the growth. We are starting new verticals. We have stopped doing some businesses which required higher capital, and that is the reason why you are seeing this. The moment you start, if I need a high-yielding book, I mean, how do I do it? Because if the capital is a constraint to me, all this everything is interlinked. I will start doing it, suddenly it will come down below 20 or 18, and you will again ask me, what have you done? Why are you doing it? So it is important that we take a very, very conscious call in terms of how we want to actually enter the market. It cannot be start and stop. If I enter the market, I have to be there for some time.
So in the near future, we would like to get into high-yielding developer or the corporate book. That's what we would want.
Unnati is also high-yielding. This affordable is high-yielding. What Wali spoke about between 8 lakh to about 15 lakh. It's a high-yielding book, which is about 11% to about 12.5%, 13%, which is what the competition is offering also. In fact, competition is charging much more than what we are actually anticipating.
Just on the Unnati book, what is the difference between the tenure of the old Unnati book and the new Unnati book?
New, we have not introduced it. We are going to introduce it. That is the reason that what she was trying to explain, that you will see some results from the third quarter. It is a different product, completely different product, different underwriting standards, procedures are different, collection strategy is different. So it is going to be a very different way in which the business is handled. And it is not exactly like a prime business that is handled.
Sure. Thank you. I'll get back.
This company is very good. It knows how to do prime, but it also needs to actually do as a full suite housing finance company. This is also required to be done.
Sure. Thank you very much.
Thank you, sir.
Thank you. As there are no further questions, I would now like to hand the conference over to Ms. Deepika Gupta Padhi for closing comments. Over to you, ma'am.
Thank you everyone for joining us on the call. If you have any questions unanswered, please feel free to get in touch with Investor Relations. The transcript of this call as well as the audio of this call will be uploaded on our website, which is www.pnbhousing.com. Thank you.
Thank you very much. Thank you everyone for joining us.
Thank you. Ladies and gentlemen, on behalf of PNB Housing Finance Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect.